Hey everyone, welcome back to Corporate Decoder. Today, JAB Acquisition Corp I just filed a Form 8K about their IPO closing, and I'm seeing some interesting details on how they are structuring the deal. Quick note, this is not financial advice, just my take on public filings for educational purposes. JAB Acquisition Corp I is essentially a special purpose acquisition company, or SPAC. And this filing tells us about the money they have raised and how they plan to use it to buy another company. JAB Acquisition Corp I, a company that has been set up to find and buy another business, has officially closed its initial public offering, or IPO. This means they have sold shares to the public and raised a significant amount of money to fund their future acquisition. They have also given us some details about what exactly they are selling to investors. So what are investors actually buying? Well, it's not just a simple share of stock. When you buy a unit from JAB Acquisition Corp I, you are getting a package deal. This package includes one Class A ordinary share, which is a regular share of ownership in the company, but that is not all. You also get one redeemable warrant, which is like an option to buy more shares later at a set price. And to top it off, you get one right. This right entitles the holder to receive a portion, actually 1/4 of a Class A ordinary share, once the company successfully merges with another business. It is basically a sweetener to encourage people to invest in the SPAC, hoping that the future merger will make these rights valuable. The company is offering these units, which contain the share, the warrant, and the right, at a price of $10 per unit. They have successfully sold 1725000 of these units. This includes an extra 225000000 units that were sold because the underwriters, the investment banks helping sell the shares, decided to use their over-allotment option. This option allows them to sell more shares than originally planned if there is high demand. This brings the total money raised from this IPO to a massive $172,500,000. That is a lot of money, and it shows there is significant investor interest in JAB Acquisition Corp I. On top of the public offering, they also conducted a private placement with their sponsor. This sponsor is likely the group that initially formed the SPAC. They bought an additional 260,000 units at the same $10 price, adding another $2,600,000 to their war chest. So in total, JAB Acquisition Corp I has amassed over $175 million. This capital is intended to be used to find a suitable company to acquire and merge with. The clock is ticking for these SPACs, as they generally have a limited time frame, typically 18 to 24 months, to complete an acquisition. If they fail to do so, the money raised is often returned to investors. The filing also mentions that an audited balance sheet is included as an exhibit. This document will provide a clear picture of the company's financial position right after this fundraising. It will show exactly how much cash they have on hand and what their immediate financial standing is. While we don't have the full details of that balance sheet in this main filing, knowing it exists is a good sign for transparency. This filing is essentially an announcement saying, hey, we did it, we raised the money. It isn't a deep dive into the company's operations or future plans beyond the general goal of finding an acquisition target. The real analysis of JAB Acquisition Corp I's financial health and future prospects will come later, once they announce their merger with a target company and we see their subsequent filings. This IPO structure with units, warrants, and rights is pretty standard for SPACs. It's designed to attract investors by offering multiple potential ways to profit. The warrants give them upside if the stock price goes up, and the rights give them a potential bonus if the merger is successful. What is interesting is how these SPACs operate. They are essentially shell companies created solely to raise capital through an IPO and then merge with an operating business. The SPAC management team, in this case led by Joshua Jagged as Chief Executive Officer, has a fiduciary duty to find a good deal for their shareholders. They are incentivized by success, but there is also pressure to make a deal within a specific time frame. Looking at the broader market for SPACs, many of them have faced challenges since their boom in 2020 and 2021. A lot of them have struggled to find attractive acquisition targets, or have seen their stock prices decline significantly after the merger. For instance, many SPACs that went public around the same time as JAB Acquisition Corp I've seen their unit prices fall well below the initial $10 offering price. It puts pressure on management to find a company that not only justifies the valuation, but also has strong growth potential to overcome market skepticism. The key for JAB Acquisition Corp I now is the quality of the company they choose to merge with. Investors are looking for companies with solid fundamentals, a clear path to profitability, and a competitive advantage in their respective industries. The capital they have raised gives them flexibility, but a poor acquisition choice could lead to significant value destruction for shareholders, similar to what we have seen with other SPACs that have made questionable mergers in the past. We will be watching closely to see what sector they target and the specific business they bring under their umbrella. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this video useful, please like, comment, subscribe, and join our Discord.